welcome to this weekly update. I'm Julia Lee, an equity strategist at Bell Direct. And after 5 consecutive weeks of losses, it's finally nice to see a positive week on the Australian share market. Of course, this is all on the back of those central bank meetings, particularly the FOMC, the US Federal Reserve, keeping rates unchanged in September. Macquarie saying that conviction around a December rate hike, though, is growing. But looking at the backdrop, we are seeing improving real activity in the US, increasing inflation, and yet the Federal Reserve is looking like it's happy to be slow and cautious. And of course, that backdrop is great news for risk taking, as we have seen for equity markets this week. Staying with Macquarie, and Macquarie is saying that earnings disappointment is the death of high PE ratio stocks. We certainly have seen that with stocks like Aconex, CSL and TPG. Conversely though, high yielding stocks, the death of high yielding stocks is higher bond yields. Look, this next matrix looks at the relationship between growing earnings as well as PE ratios. The most positive box would be growth in earnings per share and a small PE ratio, and that would include stocks like BlueScope Steel, Fortescue Metals, Sydney Airports and Boral. The most negative box though would be decreasing earnings per share and a high PE ratio, and that's stocks like CSL, Crown as well as News Corp. Also, the next box just looks at relationship between nominal yields and PE ratios, and you can see that currently low bond yields means a high PE ratio or a rising market. So keep on watching interest rate expectations, because of course lower for longer is good news for the equity markets at the moment. Moving on to the banks and Morgan Stanley, and just having a quick look at the ratings. It has ANZ as an outperform, Westpac as an equal weight, but both Commonwealth Bank and NAB as an underweight. From the banks to some commodity-based stocks, and this time we're looking at Credit Suisse, which has upgraded its expectations around iron ore as well as coal. Look, it has an outperform at the moment on BHP Billiton as well as Western Areas, but an underperform on alumina as well as Iluka. Staying in that commodity space, and this time we're looking at Macquarie and energy stocks. Macquarie saying that Beach Petroleum has the greatest sensitivity to oil prices. So if you think that oil prices is going up, Macquarie reckons that Beach Petroleum is the way to go. But Senex Energy is its preferred mid-cap stock in the space. It also has Sino Energy as a Sino Oil and Gas as an outperform with a 25-cent target. Look, just having a look at some of the catalysts for these energy stocks. Beach Petroleum, it has a strong balance sheet, $500 million worth of liquidity. And looking at it, this particular company, it has production from the Western Flank Oil Project, which around about 45% of its production will come from in FY16 as well as FY17, and that oil production means it has the highest sensitivity to the oil price. Look, for Senex, we're looking at dewatering and initial flows, which will be a catalyst for WSGP. So just watching that. For AWE, just looking at the de-risking of the Perth Basin through 2 well appraisal drilling campaigns, and of course in the space, M&A and divestments will also be a strong catalyst for valuations in the sector. Moving on to Bell Potter and its gold tracker, and look, we've seen 4 out of the last 10 weeks seeing an overall selling in gold ETF holdings. However, the selling weeks have been much smaller compared to the buying weeks, and Bell Potter saying that, look, gold looks pretty sticky at here and it's comfortable with long positions, so still taking a long position in terms of gold. We've now moved on from earnings season and reporting season, and we're moving into the October AGM season, and some catalysts coming through here from Morgans. For Sydney Airports, watching the Institutional Day on the 17th of October as a potential catalyst for Sydney Airports, and of course the 18th of the month we usually see traffic numbers coming through. For corporate travel, the AGM is on the 27th of October, and with a strong trading update expected at that AGM, that could be a catalyst for the share price. Ardent Leisure, the marina sale should be quite imminent, so keeping an eye out on that. And for Megaport, there are some industry events in October as well as in September that we'll be keeping a close eye out for as a catalyst for the share price. So planning to focus in on this week. There has been a bit of volatility in terms of the markets because of the movement in bond prices and bond yields on central bank expectations. But given that central banks do look like they're willing to stay low and on hold for a while longer, that's been a positive backdrop for equity markets around the globe. I'm Julia Lee from Bell Direct. Hope to see you next week.